something like an SBI net banking, even during the weekend, we couldn't even move the funds around, right? With that high reward, there is high risk also. Bloomberg has their own selection criteria, like they don't select meme tokens, they don't select projects like, where they see a potential, high risk.
Hello everyone, welcome to the Crypto Show by Coinscapture. Today we have Zakhil from BitSave. Welcome Zakhil.
Thank you, Markham. Thanks for having me.
So Zakhil, tell me about you. Tell me about how you started your journey in crypto.
Yeah, so I come from a finance background. After my schooling, I was doing CA. So during my internship was when I came across Bitcoin and crypto. And, that was a time when I was managing, like client accounts, like transaction and stuff. And if you remember, like 10 years ago, something like an SBI net banking, even during the weekend, we couldn't even move the funds around, right? So that was like a genuine issue that I was facing at that point of time. So when I read about Bitcoin and the fact that it's 24/7, it's borderless, I can transact at any point in time, it made a lot of sense to me, forget the technical aspect and all that, but just that concept made a lot of sense to me. So I started investing a bit with my internship, scholarship, or whatever money that I had, and and of course the industry also kept evolving. And it was in 2017 when I was preparing for my finals, for my CA finals. That's when the bull market was, starting. The 2017 bull market was starting. And we had some ether that was lying down, which we bought, I think, around 2015 sorts. So and if you remember that time, none of the Indian exchanges had Ethereum listed. Most of them just had Bitcoin, and there was genuine demand for altcoins. Especially for Ethereum at that point. So since we had some liquidity available, we were like, why not try something? Maybe launch a brokerage firm where people can, buy and sell Ethereum. So I think this was some May or June of 2017 when we actively started being involved as Ethereum brokers. It went on for a few months. That's when Koinex was announced. Koinex was the first multi-asset open order book exchange in India. So Koinex started with, I guess, five of the top 10. I'm sorry, five of the top cryptos. Right. So we got in touch with them, and they were looking for liquidity providers because most of the people did not have liquidity for altcoins, right?
Yeah.
So that's how the association with Coinex started. So we started as liquidity providers on Coinex. Later, we were helping them with a bunch of other stuff like product testing and support and all that. A few months into it, we realized, okay, why not join the team. Right. So me and my co-founder Asif, we both were part of the Coinex team throughout the entire journey. Unfortunately, in 2019, we had to close down because of the RBI situation that we had. So but since so even I think that was 2019, right? So almost for 3 years I was doing crypto full time. So I did not want to go back to anything else. And the entire team pivoted into accounting tools. So that's when I was like, my life has come to a full circle, right? Like leaving CA and going to crypto, now going back to account. Yeah, but then it was not giving that sort of that adrenaline rush, like you say, right? Because he's so used to that, the volatility of crypto. So from 2020. We've been completely into trading, brokerage, and a bit of fund management. So that's the background. Yeah.
Interesting. So it's a lot of things involved, from like brokerage to liquidity provider, then coming team member and now starting your.
Exactly.
That's a great thing.
Yeah.
So with that, like being an experience, and like as you said, you are also managing funds for others. So what do you think are the misconceptions of a common people when it comes to investing in crypto?
So I think there are mainly three things that I've come across when it comes to the popular myths, as I would like to call it, right? The one is we keep hearing crypto is banned in India. And I don't know where exactly it is coming from. I think it can trace back to, the 2018 budget speech where our finance minister said crypto is not a legal tender, right? So, and a lot of people thought that makes crypto illegal, which it is not. And then people, one thing which especially HNIs tells me is that, they don't want to touch crypto because it's used by criminals. And again, we have a lot of proof that it's just very negligible percentage of crypto transactions that are being used for those kind of transactions. And then I guess the most common thing is crypto is backed by nothing, right? And now I think people need to realize that, people need to realize that, even the currency that they use on a daily basis, it's not really, backed by anything. So, I mean, that's a promise, of course, which I understand from the governments, but that doesn't really your purchasing power. I think more than 10,000 rupees that is written on, or let's say 1,000 or 2,000 rupees that is written on your currency note. What is important is what you can buy using it, right, over the years. So I think from that perspective, because of the scarce nature of crypto and how it's actually backed by blockchain and mathematics and a lot of other stuff, right? So it gives you that security. So I mean, when you sit down with people and then try to explain, there are a bunch of people who understand. Okay, and I think what is important is that people like us going there and talking, right? Otherwise, it's just a lot of scattered information here and there, and then you're not even getting the right information from other sources. So I think we really have to, all of us, right? We have to keep talking about how these things work, and I think it's a long road ahead for sure. But I think if we all put in that effort together, definitely we can, at least burst some of those, major myths that are out there.
That is true. So the myths, like a commonly myth which we, as you mentioned, 2-3 myths, that's thinking it's been used by criminals or it's bad. That is normal. I think with that, people need to know about, like, awareness is something which is more important, which I think is going on right now, which was not in 2000.
Yeah.
That is it.
Yeah. I mean, I think it should be more than a money-making tool, right? I think that's the only point when you start looking beyond that, and then maybe with more real-world use cases where when people start using it, without even realizing that, okay, they may be interacting with blockchain or whatever. At that point, I think they would realize. Look at internet, right? People were making fun of it when everything started, but now literally everyone is using internet in one way or the other. So I think we'll get there. Something which I keep telling people is that we're still a dozen years old industry, right? I mean, there's a limit to what you can expect from that kind of that young of an industry, right? So give it time, and I think over the next 5-10 years, it's going to be very exciting, especially in terms of scaling and a lot of real world applications that's going to come up.
Yeah. So it's evolving. It will take time, and
it will.
Which were we in 2017 to like what we are in 2023. There's a lot of things which have been changed.
Yeah. Okay.
Yeah.
Even from sorry to interrupt. Even from a regulatory perspective, right? Like we had absolutely nothing, right, in 2000. I think we just had that one first circular from RBI. That's it. Now you have PMLA, FIU, and taxation, and you have a lot of things, right? So I think give it time. Let's see where we are after 10 years, right? So let's work towards that right now.
With that, like investments and everything, a normal perspective is like people invest in mutual funds when it comes to stocks and for a safety. So right now there's a new thing which is going on, like it was from a long time, like crypto mutual funds. So how are normal mutual funds different from crypto mutual funds? That is something which I'd like to know.
Okay, so I mean, mutual funds is a broader term, right? I think it's a broader term, and it covers literally everything that for example, equity mutual funds, gold mutual fund, debt mutual funds. So so it basically depends on what the fund is investing into, right? What the underlying assets are of the funds. And so in that way, crypto mutual fund is basically a fund that allocates to crypto, majorly to crypto, right? I mean, that's the only different. I mean, that's a main difference. So let's say compared to a equity mutual fund, which most people are used to, the basic difference is instead of investing into Reliance, Tata, and stuff like that, we invest into Bitcoin, Ethereum, and other crypto assets. So from a product level, that is only different. But I think the major differences comes from the regulatory perspective, because mutual funds are a highly regulated products, especially in India. Right? There's a regulator, there's SEBI to regulate, make sure that there are guidelines in place, there's proper disclosure that's happening, and there's proper investor protecting measures also in place. So from that perspective, I think we are not there yet when it comes to crypto mutual funds. We don't really have any regulatory clarity. So what we have done at BitSave is that we've taken like the rules that SEBI and maybe a few other regulators around the globe has issued for other mutual funds, and then we've tried to incorporate them. For example, the transparency that we have in terms of where we have parked the funds and where we are storing the fund, the disclosure. So there's the detailed fund document that we have put on the app, which talks about all the risks that you are taking, and the level of drawdown that you can expect. So I mean, it's about keeping people informed and not really promising anything, right? Because we have the data where the index have performed significantly well over the last few years, but it's at the same time, it's very important that people know what the risk associated with it is, because with that high risk, with that high reward, there is high risk also. So those are the things. And of course, with the taxation perspective, again, we still don't have clarity. So probably until there is any other amendments, I think it would again be like a 30% bracket compared to maybe 15 and 20 when it comes to traditional mutual funds. So like I said, from a product perspective, it doesn't really make any difference. As in, if you go to a Paytm Money and if you come to BitSave, your experience is more or less the same. You choose a fund, you invest into it, it goes up, it goes down, and you redeem and you take back the funds. But like I said, the differences happen mostly from a regulatory and taxation perspective.
And for this, like for crypto mutual funds, what type of research and analysis is done normally to like which to buy, which not from at the company level?
Yeah, so I mean, I can speak for BitSave. I mean, I'm not really sure of other companies, but at least at BitSave, we're a passive only fund house. So by passive only, I mean to say is that our focus is not to beat the market, but it's to go with the market, right? So we have the primary product line in index funds, where we'll be mimicking an index. So the first offering that we have is a Bloomberg Crypto Index fund, where we are tracking Bloomberg Crypto Index called BGCI. So the asset selection is completely on Bloomberg. BitSave doesn't really have any role in what the components are. So just like, for example, I can tell you, SBI Nifty 50 Index Fund. So in that case, SBI is managing things for you, but Nifty 50 is the index. So the components are decided by NSE, which is part of, let's say, the top 50 companies in India. Right. The same way, Bloomberg has their own selection criteria. Like they don't select meme tokens. They don't select projects like, where they see a potential, high risk. For example, I mean, everything is high risk, but at the same time, fundamentally weak projects, I would say, like Luna or maybe FTX for that matter. So they never selected these types of projects as part of the index. So that is completely on them. But I think going ahead, we'll have a few products that are completely designed in-house as well. So for example, the next one that we are launching probably later this month or early next month is a hybrid product where you have a mix of crypto and gold. So the idea of the product is to help people. It's a very entry-level product where some people are not really comfortable with the large drawdowns of crypto. Like it can go down as low as 80%, right? So, but if you mix a bit of gold to the whole portfolio, it can maybe, we can restrict it to some 40 to 50%, which will make a significant difference in the next rally. So that is what we are attempting. So in that case, the selection would be on us. So again, like I said, it's a very entry level, low risk. I mean, we want to keep the risk level as low as possible. So for now, we are just keeping into Bitcoin and Ethereum. As those two will be the only crypto which will be part of the index. So yeah, we have a few fund managers working, are very experienced in these things. So I think primarily it's the volatility that we are looking at. Also the fundamentals, but I think more than the fundamentals, we are looking at how low these things have gone over time. I mean, I think some of the alts have gone like 95% sorts, right? So it's not really ideal to include them in that kind of that kind of a fund where we're trying to prevent the large drawdown. So we're keeping it as maybe the top 2 or top 3. Maybe the current criteria is ones with more than 1 billion. I think 500. I think 100 million in market cap. I mean to say 100 billion, right? Yeah, 100 billion in market cap. So that is the criteria that we've kept for right now. But it will keep evolving. I mean, at least for the funds that we do in house. For the index funds, it will be completely dependent on the whoever is the index provider.
So you mentioned Bloomberg while you speaking about crypto index, right? So what exactly is Bloomberg licensed crypto index fund, and how it has been used by firms like you?
Yeah. So like I said, let's take the example of SBI Nifty 50 index fund, right? So in that case, SBI is the fund manager. So they are the ones who interact with you. You give the money to SBI, they allocate. You take the money back from SBI. So everything that you do happens directly with the fund manager or the AMC. That is SBI. And then you have Nifty 50, which is the index that is managed by NSE. All the Nifty indexes are created and managed by NSE. So in that case, SBI requires a license from NSE to build products based on these Nifty indexes. For that matter, I think literally all the 44 or 45 AMCs in India, all of them have the license from NSE to make these products like index funds based on Nifty indexes. So the same in our case also. So Bloomberg has an index that I think it's been they launched it in 2017. It's called Bloomberg Galaxy Crypto Index. It's a large cap only crypto index. So they select up to 12 large cap token assets as part of the index. So there are currently only 2 companies that I'm aware of that are licensed by Bloomberg to build products or index funds based on this index. One is this company called Galaxy, which is in US. So it's restricted to HNIs and people in US, and then it's BitSave, which is basically open to even retail users. So basically all your interactions, like I said, would happen with will happen with BitSave. So you put the funds to BitSave. So we do the allocation part where let's say you put in $1,000, whatever. Let's say currently there's 35% of Bitcoin part of the index. So $350 would go into a Bitcoin. So these allocation we'll be doing, and we'll take care of the storage also at our end. Currently we are partnered with Cefu, which is a custody partner. So the funds are moved to Cefu as soon as allocation happens, and then every day we update our proof of reserves as well, showing that you can go and verify that whatever that we hold is stored safely over there. So yeah, this is basically the association. The best part of the whole structure is that you don't have to rely on me or my team in terms of the whole asset selection criteria, right? Because for a fact that Bloomberg, I think they're some 40-year-old legacy that they have, and they have the research team to make sure that they're delivering the best quality when it comes to the index construction and all that. So I mean, asset selection, like I said, is completely handled by Bloomberg, and it's just the management and allocation, storage and stuff that we take care it at our end.
So it's basically a layer on top of Bloomberg, basically. So I know.
Maybe, yeah, but it's not really a layer, but yeah, it's more of a, it's more of we are tracking them. So it's not built on top of Bloomberg, but it's more of, we are actually a platform that is built on top of Binance ecosystem. So everything happens on top of, so it's, I think you can look at more like a zero than small case, right? So we are built on top of Binance and we track Bloomberg's index for this particular product. I mean, tomorrow we might have a different index fund tracking a different index as well. Yeah.
So with that, like, tell more about BitSave. Like you mentioned,
Yeah.
how it is simplifying investment, and like what would be the minimum criteria if someone wants to invest in it? I think that would be more.
Yes. Yeah. So, I mean, talking about BitSave, so over the last 6-7 years, we have essentially done 3 things. One is helping people buy and sell crypto. Second is advising people on when to buy, when to sell, and all that. And thirdly, managing, some funds at our end itself. So BitSave is basically a platform where we have put together all these 3 things to, and in a structured and scalable manner. So over the years, I think it became increasingly difficult to, even the quality of service that you give, right? You can maybe tell a person to buy, and maybe I think more than the time of your buy, what is important is the time of your sell, right? So it actually becomes a very difficult in terms of advising people and following up and all that. So it was 2 years back that when we decided, okay, this is what we want to do for the rest of our life. It's just that we did not start up quickly because we wanted to prepare ourselves as well in terms of, because it's a very big game that we're going to play, right? So we spent last couple of years like learning stuff. Like I took up this course called CMT, which is, it's a course for professional traders. My co-founder Asif, we took up MS in financial planning. So we were preparing for it, and we were waiting for market to be, as low as possible to launch the products, because it also gives us the advantage of build. I mean, there are 2 views to it, but I feel building during the bear market is, is better for the product compared to building it during a bull market, because right now we have time to, talk in detail to our users, understand where exactly to improve, and also the tech is, it can be built very strongly. Unlike a bull market where you have a very strict deadline of shipping things as quickly as possible. So yeah, that is one of the reasons why we kept waiting. And when FTX collapse happened last year in November, we were like, okay, this is time for us to start working on the product. So it was the last week of November where we began working on BitSave. So over the years, speaking with these many people, the most asked question was what to buy. And I think literally all the crypto people, they might have experienced the same thing. Whenever you say buy crypto, the next question is which crypto to buy. And we were thinking of how exactly to solve that. And when we looked at traditional markets, we realized, okay, you have mutual funds, right, where you just put the money in. You don't have to be bothered about which ones. And more than which ones, you don't even have to know what those companies are doing. Like, I'm not bothered about what Reliance is planning for next year. I'm not bothered about Tata's, quarterly earnings, right? And I think one of the other challenge that what we keep hearing about crypto is that I don't have time to understand. And I think the space is so fast evolving that even if you spend time, it's very difficult for someone outside the industry to keep track of or understand how in depth how these things work. So we were thinking of something that is so simple, where anyone can understand, but at the same time, it also adds value in long term. See, short term, it's very difficult because of how cyclical the crypto is and how market evolves over time. But I think in long term, one of these interesting numbers which I recently came across is that Bitcoin over the last 13 years if you had bought Bitcoin at any point, forget the time, any day in the last 13 years, and held it for 4 years, without selling, held it for 4 years, the minimum returns was 120%, right? So it keeps going up and down, but if you held it for 4 years, that is what it does. And it's literally the best alternative, investment option that have ever existed. So, and one of the major challenges that we found, or behavioral issue which we found with people, the whole dollar cost averaging, it only works if you're averaging into something that has a future, right? But we saw a lot of people averaging into things that are literally dead, so that was like a major risk. And that is when we felt index is the best way to average it, because over time the index will anyway evolve, right, to the market conditions. Because if a project is not performing well, it will be dropped out from the index, and whatever is doing well will be added back to the index. So you literally don't have to be bothered about doing any research, bothered about how the space is evolving, and any of that. If you want to put 10,000 rupees a month, you keep putting 10,000 rupees a month and just don't care about anything else. So we felt this was the easiest way anyone can, enter into the space. And maybe eventually when they figure out things, they can take some profits from here and put into, maybe small caps, mid caps, or whatever they want to experiment with. But I think not just crypto, I feel any market for that matter, the easiest way to start investing is always an index fund, right? So the idea at BitSave is to simplify it as much as possible. And I think that is what we've been hearing also from our, initial clients, because we have a lot of people who have never invested in crypto, who have started their crypto journey with BitSave because it's so easy, right? I mean, you sign up, you do your KYC, you deposit, and you just put the money in. You don't have to be bothered about what proportion into each assets, what these assets are, and any of those things. So I think we have that chance to, expand the ecosystem. And I think that's very important as we, go ahead, right? Because for more people to come in, more capital to come in, we need these simple products, which anyone can understand and stay invested in it for the long term. So yeah, I mean, to put it in very simple words, BitSave is a passive-only crypto mutual fund platform where, we have just one offering, and probably, soon we'll have the second one also, where you just come in and you invest. That's it. You don't have to be bothered about anything else.
With I think I wanted to also know about what is the minimum amount?
Yeah,
that is more.
Yeah. So for the Bloomberg fund, the minimum is 50 USDT. So approximately it comes around 5,000 rupees in INR. That is for the first investment. So once you put that in, you can do as low as 10 USDT. So from the second investment onwards.
And people can invest using fiat also, as in INR.
Yeah. So we have partnered with this on-ramp service called Alpine. So Alpine has all the gateways like UPI, IMPS, and NEFT, all that. So it hardly takes less than 2 to 3 minutes for you to, load the fund, load the wallet and invest. It's very easy.
Interesting. So that's a easy gateway to invest using UPI. That is more.
It is very easy. It is very easy. I mean, unlike what most people are used to, where you transfer funds, you enter UTR and all that. You don't have to do any of that. You will directly get the collection request on your UPI app. You pay it, and within a minute, your wallet gets credited.
And about investment in crypto is always a harsh thing when it comes to taxation. So what do you think about if someone invests in crypto using the funds as in the index fund, and then what would be the taxation part work like?
Yeah. So one advantage at least Indians would have by investing in BitSave, other than trying to do this, at their end, is what we do is a tokenized approach. So our funds are tokenized. So what you essentially buy or swap your USDT with is a BitSave token, which we issue on Polygon. So and the token derives its price from the underlying assets. So every day the NAV, the value of the token gets updated accordingly. So I think mutual funds in general is a tax efficient way of investing because you don't have to be bothered about individual things being bought and sold by the fund manager. So for example, if I'm trying to mimic the Bloomberg index myself, I'll be buying Bitcoin, I'll be buying Ethereum and all the other stuffs. Now, let's say on a monthly basis, I'm rebalancing my portfolio. And if on Bitcoin, I made some profit, on Ethereum, I made some loss, I can't set off, right? So that is a major challenge that I have. But if you're investing with BitSave, what you're buying is the token. So whatever we do at our end in terms of rebalancing and, things like that, it's not really affecting you. So it can actually go as one entry in your ITR, where you say, I bought BitSave's Bloomberg Index token at this price. I sold it at this price. This is my profit. This is my tax. Instead of, entering like 10 different trades or maybe more than this. That is one advantage. I think we're still figuring out if a foreign mutual fund, a tax rule can apply to our products, but I think it's too early to comment on that. So to be on the safe side, I would still recommend to do the 30%. We can't really get away with that, but at least from the set off part, I think people will have an advantage if they invest in BitSave products.
Interesting. And so right now, how an user can onboard just with a mobile number, or like what are the KYC things which are?
Yeah. So you can the app is available both on Android and iOS. You can download the app. You can sign up using a mobile number. And once you sign up, there is a basic KYC requirement. So for Indians, it would be PAN plus a selfie and Aadhaar. So once it is validated, it's all automated. So probably if everything goes well, you can finish it in like 2 to 3 minutes. And once that is done, then you add your UPI, which is linked to your bank account, deposit your funds. So that would be another 2 minutes, and then you invest into the fund. That's like another 1 minute. So everything should be done in like 5 minutes.
So you are using a wallet also, right? For it, like for your specific policy.
You mean to receive the funds?
The funds would be received in INR, right?
Yeah. No. So basically, like I said, we are partnered with Alpine. So people would be transacting INR or sending INR to Alpine, and Alpine would be settling with BitSave in USDT. So that is how it would be working.
Yes. That's I think people need to know about your more users to easily onboard to crypto, which is very myth basically, which I would say. I think
crypto is complicated. Yeah, that is what we keep hearing.
It's not complicated. People are making it complicated.
Yeah.
They will help it out. It was a great conversation with you. Great to know about like how crypto mutual fund works and everything about it. So any closing thoughts from your side?
I mean, I feel that whoever not invested in crypto, if you're listening, I think everyone should consider at least 1%, of their portfolio into crypto, just because of the fact that, I think if you remember for the internet, right, we had that dial-up to broadband phase, the mass adoption that happened for internet. So I think we are entering that similar phase for crypto in the next, in the next 5 to 10 years. So it would be very risky, maybe not to have nothing at all. So maybe, I mean, if it plays out, we all can go home happily. And if it doesn't play out, it's just 1% of your portfolio. Like, I think you will lose 1% literally in any other assets, maybe in any equity or whatever. It's something that keeps happening. So I think everyone should consider, starting small and, start small and start with BitSave. That's all I have to say.
Thank you. Thank you for your time. Have a nice day.
Thank you. This was nice. Yeah. Cheers.